Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. It's Friday. It's April 28th. April is almost behind us. I don't even know how many days April has, but we don't have a long to go. It's about 7:44. The market's going to gear up to open up in about an hour and 46 minutes to be specific with you. And as you can see here, the Dow's down about 100 points. Nasdaq's down about 29 points. And boy, oh boy, yesterday we had a strong day. Now, speaking of strong days, I want to warn you about something because today's Friday, and Friday we talk about algos. Now, before I get too deep into my analysis, if you can't find this video, just go to YouTube and search Wealth Press. And there you will find all these videos in order that I actually post them every day. Like our channel, subscribe to our channel, and post comments. I respond to these comments. Good, the bad, and the ugly. It's all there. Now, I want to warn you about something important, something really, really important, because it's Friday and we talk about algos. Now, as you can see here, the Nasdaq is gearing up to be near swing highs. That's when the algos attack. They like to ring up stops when we're right up here. Let me show you an example. See that? They wait for the high, they take the stops out, and then they burn this market. Well, we're very close to that right now, as a matter of fact, as you could see that. We don't have a lot more to go till we get up there. So if we do get up to the 322 level on the QQQ, be very, very cautious because I could smell it from here. These algos are going to try to clip our wings, create a lot of buy orders, and then take us back out. So be very, very cautious with that. Also, you'll see the divergence. Look at the divergence. We're almost back to this level. Look at the difference between momentum levels. Whoops. Right here, and right here. We're just a hair lower. We're at 321 here, and we're at 321.94 here. But look at RSI. The RSI divergence is huge, which also leads me to believe there's going to be a failure here, not a successful breakout. I don't believe tech has enough firepower to take us out through here. So be very, very careful because I'm sniffing a lot of algos, and I'm seeing this happening again. Usually after days like this, you have another run up of 1 or 2 days or just a flat turnaround and it goes down. So be very, 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 very cautious right now. Like really, really cautious right now because I think this market's going to remain choppy. I mean, look at the Dow Jones. Similar situation here. See that? Look how choppy we've been for the last, since 11. We're talking now 5.5 months of choppiness, almost half a year. I don't think anything's going to change. I don't think we're in any kind of an economic environment where anything will change. And I think this will decline. But keep your eye on the 34,100 level. If you start seeing the algos take the market up there, it's a pretty good chance we're going to sell off. If you look at momentum levels, especially on the tech, I just showed you the Nasdaq. The Nasdaq is made up of consumer discretionary, information technology, and communication services. And all of these are right at the 50, 24, 42. And if you look at them on a longer term chart, you will see something interesting. You will see that it looks like it could have been bottomed out, but I'm not sure. That's the infotech, right? Now look at consumer discretionary. Still coming down. It had a little run up yesterday, but I'm not concerned. Look at it. It's coming down from here and it still has a while to go. That's consumer discretionary. What about communication services? Now it rallied, it spiked hard, but look at where it's coming from. So I would be very, very cautious right now in light of these levels and in terms of where the Nasdaq is, especially in light of the levels that we're at right now. And especially, look at where we're at right now. I just don't think we're going to break through these in a good faith way and move lower. And again, as I said, momentum levels are overdone to the downside. So I would be really, really cautious because those algos are going to tear into us. Also, keep your eye on algos in the 3 sectors that are the most vulnerable, which are consumer discretionary, infotech, and communication services, especially because the earnings on all the large caps are about halfway out of the way. And today, you've got earnings on Chevron. Energy stocks are coming into light. ExxonMobil, Chevron. Let's see if there's other ones. Let's see here. That's about it. There's not a lot of companies coming out today. Monday, there's a another big chunk of stocks. Also, Colgate-Palmolive, a little consumer staple stock there that everybody knows and loves is coming out as well. So we got to be really, 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 really cautious. Now, in terms of economic data, we've got personal income. Now, this is what the Fed looks at, but they're not looking at it over month. They're looking at it over year. And over year, we were at 5% last year, and we're looking at 4.2. In terms of month over month, we're looking for a very flat, non-eventful activity. I'm not expecting it to be that high, and I'm not expecting the Fed to comment too much on it because the numbers yesterday, earlier in the week, the GDP was really interesting. Speaking of the GDP, I want to show you how whacked this market is. Look at personal consumption expenditures. They went from 1% to 3.7. That's huge. That's huge. And then look at quarter over quarter growth, the annual rate, 1.1%. Doesn't look all that great. So there's a lot of conflict here. And as I was saying earlier in the week, I think this has a lot to do with COVID and all the issues that were caused as a result of it. So I think the market went really cool, really hot, really cool. The COVID shook us like a bag, just like a candy bag like this. And now we're just kind of all recovering. So the data that's coming out from the Fed is very inconsistent, and we have to take it with a grain of salt. Now let's talk a little bit about what happened, give you guys a little summary, and tell you what to expect next. So 3 major U.S. benchmark indices rally Thursday as technology continues to shine. Be careful with technology shining. Really, be careful. Because the large cap stocks are almost behind us. There's just not all that much more firepower there. So if we start fizzling out on the smaller stocks, which haven't been rallying very much, it's going to be a problem. Today, we brace for Federal Reserve's preferred inflation gauge. Thursday's tech-heavy Nasdaq lodged its biggest one-day percent gain since March, while S&P and the blue chip Dow clinched their largest daily percentage gain since January. Wow. Boosted by more than 13% share jump in Meta. Who would think, right? I did not think these tech stocks would have really good numbers, and look at where they're at. And I think that has a lot to do with the fact that they've been revised lower. Commerce Department preliminary reading showed that U.S. economy grew at 1.1%, weaker than the expectation of 2%, as an uptick in consumer spending was offset by a downturn in private inventories and non-residential. Also, Labor Department reported that unemployment benefits actually dropped to 230,000. That's a really good sign. Now futures are pricing in an 88% probability of a 0.25 rate hike in May 3rd. That's the highest we've seen since the last rate hike. This actually tells me that if the Fed does take action, which they more likely are, it's an 88% chance, that it's not going to really impact the bond market too much because it's pretty much priced in right now. And notice where the bond market is. It's squarely within its range. This is why I didn't want to take a long or short. It's just we didn't have any clear guidance of where things were going to go next, and still don't. So watch the bond market for clues later today after we get the job employment data. That'll be very, very important. Today we have Exxon reporting, Chevron reporting, AON reporting, Colgate reporting, NWG reporting. Now, this is the good part. Earnings so far are only down 2.4%. They were expecting 5.1%. This is a very, very positive news for the market and one of the reasons why we're seeing the market rally. Now, I'm expecting the numbers to start declining as we head into next week. Today, all eyes are focused on the U.S. core personal consumption expenditures. That's their preferred inflation gauge. That's coming out in about, let's see here, 40-something minutes. Europe is down. They're assessing growth data. They're really focused on what's happening in the U.S., and they're a lot more fearful, it appears to me, of a banking crisis, global banking crisis, than we are at this point. China closed higher ahead of the May Day holiday, led by gains in media, financial, and consumer stocks. Financial consumer staples jumped on grounds Friday. Meta stock surged amid a frenzy around Chinese equivalent of OpenAI Chat GDP chatbox. Meanwhile, China Banking and Insurance Regulation Commission said it would enhance credit support and lower the financial cost of small and micro enterprises this year, which I think is interesting. Japan closed sharply higher and hit an 8-month high after the Bank of Japan maintained ultra-low interest rates and said it would patiently continue with its quantitative easing and yield control measures. I don't think they're going to be that patient. Matter of fact, the Bank of Japan said, macro chief economist said, the Bank of Japan will consider a change in monetary policy, but it'll take a long time. They have a new prime minister, and I'll talk about that today and Ask the Pros and Warren Buffett's fiasco and how he fits into all of this. He fits into everything, right? And today, pre-market, Amazon is already down 1%. Not good. Cloudflare is down 24%. Not good at all. That's a big tech stock. for security. Snap is down 18%, and Intel gained 4% after semiconductor beat revenue and expectations. You don't hear as much of Intel as you used to back in the day. And as I mentioned, you've got Exxon and Chevron reporting today. Now, talking about this market broadly, let me just look at the SPY. We got to be really cautious right now. Be really, really cautious. Be really, really cautious of the 415 level. And if we reach that level, I think we're going to bounce just like we bounced right here. And by the way, it looked like we were going to break out right there. And it looked like we were going to break out right there. And guess what happened both times? We didn't break out. So be really cautious right now at the 415 level. Now, the fact that the small caps, and they haven't started earnings yet, so we got to be careful. But look at how they're coming down. They're not doing so well, and right now it looks like they may be breaking down, and if they do, they're going to take us with us. Also, in terms of sectors, let me just show you what's going on with each sector. In terms of sectors, consumer staples is doing good. Energy is overdone to the downside. I think energy is actually going to start coming up. Let's look at see how it looks right now. Looks like it's really bottomed out. Looks like it's really near the lower end of the range right now. Let's see what else. Everything else is kind of mid drift. There's a few other things happening, but markets are choppy. This is equivalent of a choppy market without anything being grossly overbought or oversold. Except energy. Energy is the only thing that's really coming down. I mean, Infotech looks like it's got more to go. Basic materials looks like it's got more to go. And if you look at the graphs, which we will look at right now, let me just kind of go over this with you. So be really careful. Look at communication services. Communication services, XLC. Let me show you. XLC, if you look at the chart of XLC, communication services, they look like it's going down, right? Look at that. Down. Looks like it peaked out and it's going down. But look at the chart of XLC. Looks like it's breaking out, doesn't it? Be really careful, folks. I'm telling you, the algos are right around here, and the momentum levels and what we're seeing here are just not cooperating with each other. Look at the momentum divergence. Look at that. Flat, right? Look at that. So I would be really, really cautious right now with communication services. It looks like it's one of those assets that's going to really hit us in the butt. Also, be careful with technology, but really be careful with communication and technology. Industrial stocks look like they're starting to get a little upside. Healthcare looks like it's going to fill this gap here. Utilities is looking great. I like utilities right now. Consumer discretionary, I think they're going to peak out right around and start coming down. Basic materials is starting to look a little better. Energy looks like it's bottoming out around here. Financial looks like it's not doing as bad as anyone thought, and real estate is finally breaking out. Be really, really careful with communication services, with technology, and with communication services, technology, and consumer discretionary. Let me just look at semiconductors, SMH, real quick, see how they're looking. Yeah, it looks like semiconductors want to start coming back up. Again, be really, really cautious, because if we have another major buy day, especially on communication, on the communication sector, it's going to get nasty because momentum levels are declining and this is rallying like that, and it's just too much too fast. This is earnings driven, and algos, I believe, are taking advantage of it right here. Look at that. It clipped buy stops yesterday here. This is why you got to be really careful on turning points, especially, and compare turning points with momentum levels. But be really cautious with communication sector. On Monday, I'll go through the sectors and give you the all the juicy details, and in the VIP room, I'll go through seasonality for next week, so don't miss out. It's happening at 11 a.m. today, and VIP's room is happening at 11 a.m., and Ask the Pros is happening at noon, and I'll be there on both sessions. Now, folks, Lance Ippolito, he's been hot lately. He just held a beta test class for his option scanner, and due to popular demand, he's opening up enrollment one more time. Those who enroll through the weekend will also be able to join Lance in his next private training class this coming Monday. Lance's scanner has already identified some incredible opportunities in Coinbase, Intel, Starbucks, and more. You don't want to miss this. End the Friday on a high note with Lance. Follow the link below, check it out, do it now, and have an amazing weekend. Remember, comment below the video in the YouTube WealthPress channel. There's a Telegram link, everything to get you guys up to speed. Bye, guys. Have a great, great day, and I'll talk to you on Monday. Anybody want to contact me, you could reach me out via the YouTube channel, post comments, I'll respond, or send me an email, support@marketgeeks.com. Bye.